Good afternoon. It's Friday, December 28th, 2012. I'm Logan Burgess. To my right here is Brock Shimano. Well, Brock, let's jump into Fire Tip. See how grains ended the week here on a Friday afternoon. We saw March corn up 2 1/4, March soybeans up 2 1/4 here as well. And actually, one of the more volatile trades of the day was the Chicago wheat contract for March delivery, up 6 1/4. It really seemed like this morning's export sales, which were delayed a day due to the Christmas holiday that came out this morning, really seemed to put a bid in this market. Can you kind of break down what we saw there?
You know, I think it was very supportive for the wheat market in particular. Yep. We saw wheat export sales of over 1 million metric tons. The high end of expectations was about 700,000 metric tons. So we definitely beat those expectations pretty good to the upside. A little bit of a different story though for soybeans and corn. If you take a look at this chart that we've been watching for soybeans, the red line is what we should be experiencing for weekly sales to meet current USDA projections given seasonalities. And the blue bars are what we actually are seeing for export sales. So you can see that we had quite dismal sales this week. Only 87,000 metric tons were reported, but a lot of that is due to the cancellations we saw last week from China. We did miss expectations by quite a bit. We are now 184 million bushels ahead of pace to meet the USDA projections, but we fell another 9 million bushels on that pace this week alone. Different story for this marketing year for corn. We are quite a bit behind pace. We're about 48 million bushels behind pace. Only 104,000 metric tons were reported this week, which missed expectations as well. And we fell another 4 million bushels this week. So continued strong soybeans sales, even though this week we were down a little bit due to those cancellations. But corn, we're still seeing pretty abysmal sales for corn.
Yeah, Brock, you know, as we kind of turn our attention here toward the January 11th WASDE report, in the December report, we saw the USDA not adjust their export sales projections for corn or soybeans. Are you still under the impression that we're going to need to see a revision here out of the December report, or the January report, rather?
You know, I do think that these export sales are going to have to be addressed in the January report. We didn't see anything happen in December report. We were kind of expecting it then. USDA put it off, it seems, for another month or so, but I do think we'll see somewhat of a revision lower for corn export sales and something higher for soybean sales in that January 11th report.
Yeah, Brock, you know, one other thing that may need to be revised out of that report here coming up on January 11th is the ethanol production number. And actually today, we typically get the report on Wednesday each week. Due to Christmas, though, it was delayed until today. So a lot of fundamentals here for the grain market to report on. But if we take a look here at the model that we've been following all throughout the marketing year, the blue line is ethanol production by week that we saw last year. The red bars here are reported production for this year, and the green line here is our forecast for ethanol production given current crush margins. So this week we did see a bit of a pickup in ethanol production by 12,000 barrels per day to 834,000 barrels per day reported. But the big thing here moving forward is that if we're going to meet USDA expectations of 4.5 billion bushels of corn going to ethanol use, we're going to need to see the ethanol crush margin improve. And just over the last week here, we saw it move from about $1.07 per bushel down to about $1 even per bushel for ethanol plants. So the incentive right now is really not to pick up any production, and as a result, we're looking for ethanol production to come in, or corn going to ethanol to come in about 100 million bushels behind where the USDA currently has it pegged.
You know, something else that was surprising out of the ethanol numbers this morning is we saw stocks actually get drawn down a little bit as well. You know, typically this time of year we tend to see stocks build, but if you take a look at where we are compared to last year at this time, we're still 15% greater stock number than we were last year at this time. So that's something that's concerning for the demand picture moving forward as well.
Yeah, Brock, you know, like I said, we did have a lot of fundamentals out here reported. We had export sales coming out today. We had ethanol production coming out today as well, but it seems like the fundamentals in this grain market are still kind of on the back burner right now. There's a lot of macro concern, especially related to the fiscal cliff. It seems like in Washington, it's now pretty clear there's not going to be any major development done here before we, go over the cliff here in a couple days. So it seems like that's kind of been putting a bit of a hamper on this grain market. You know, I'm really looking for next week. Obviously, we'll be closed on Tuesday for New Year's Day, but on Wednesday we're going to resume trading, and I think then the grain market's really going to be able to get back to trading the fundamentals here, and we're going to have to start trading with expectations coming into the quarterly grain stocks report and that WASDE report, which will be out January 11th. So certainly we'll keep you posted on that here on GrainTV. But I think that wraps up our show here for Friday afternoon. Thanks a lot for joining us, guys. Have a great weekend. We'll see you back here on Monday.